Welcome to my book tutorial. Today we are going to discuss about the two-way, three-way and the four-way matching process in accounts payable. Before diving into the topic, make sure to know that the two-way, three-way and the four-way matching is an internal control. The main objective of this matching process is whether the invoices you are paying to the vendor are matching in terms of quantity and the amount. The two-way, three-way and the four-way matching will ensure that you are paying the right amount to your vendor, the quantity of products or services which you have received. The accounts payable process will start with the purchase requisition. So what might be the purchase requisition? The purchase requisition is a document filed by an employee who needs raw material which is not available in the stock. Now consider an example. Let an employee needs 10,000 units plastics to prepare plastic chairs, but those units of stocks are unavailable at that moment. This is the case where an employee needs to file a requisition, that is the purchase requisition document, and they will send this document to the purchasing department. The purchase department will generate a purchase order based on the purchase requisition document. This document will hold the details like quantity, price, delivery date, purchase order number, vendor details and so on. Let's consider. Quantity on the purchase order is 10,000 units, which is known as the quantity ordered. The purchase order price is 50,000. The purchasing department will send this purchasing order to the selected vendor. On the delivery date, we shall receive the order and the receiving department will receive it. At this stage, a packing slip, which is also known as a good receipt note or the receiving slip, is generated by the receiving department. The receiving slip will display the number of units received and the unit price of the products and so on. In our case, it is 10,000 units. This is called as a quantity receipt. Once the order is received by the receiving department, it will be inspected by the inspection team and the quality department. If it matches your tolerance or the standard, an inspection document or the acceptance document is created. It will show the number of units accepted and the number of units sent back to the vendor. The units are sent back because they did not match your tolerance, that is your company standard. In our case, we assume all the 10,000 units looks good as per the business standard. So we say as quantity accepted equal to 10,000 units. The accounts payable department will receive the invoice from the vendor. The invoice will show the number of sold and the price of those units. In our case, it is 10,000 units. Shown on the invoice is known as quantity billed, and the price of rupees 50,000 on the invoice is known as invoice price. Along with the invoice from the vendor, the accounts payable department will also receive a purchase order from the purchasing department, receiving slip from the receiving department and an acceptance document from the inspection and the quality department. Now, this is a place where the concept of two-way, three-way and the four-way matching comes into the picture. Before making the payment to the vendor, the accounts payable department will conduct either two-way or three-way or four-way matching, depending upon the type of internal control which is selected by the company. The company can select either two-way or three-way or four-way matching as an internal control. Now let us try to understand multiple cases. Consider that the company has selected two-way matching. In this case, we will compare the quantity billed with the quantity ordered and the invoice price with the purchase order price. Now we will get the quantity billed from the invoice, quantity order from the purchase order, invoice price is available from the invoice and the purchase order price is available from the purchase order. And as you know, all the documents are already available in the accounts payable department because they have received everything. Now they are just going to compare if everything is matching. In that case, they simply go ahead and make payment to the vendor. So in this case, everything is matching. Your quantity billed and your ordered quantity is 10,000 units. There is no discrepancy here. Whereas your invoice price and your purchase order price are also same, that is, it is also equal, which is 50,000 rupees. So in that case, they'll just make vendor payment. Let's consider the second case where the company has selected three-way matching process. In this case, we will compare quantity billed with the quantity ordered, invoice price with the purchase order price, and the quantity billed with the quantity received. Now you can realize that the first two are exactly similar to two-way matching. They are not changing, they are just same. Now, the third one in the concept is quantity billed with the quantity received. Quantity billed will be received from the invoice and the quantity received will be available on the receiving slip or the good receipt note. Again, this is a document which is an account payable department has already created. In our case, the quantity billed and the quantity received is matching. So, accounts payable department will make payment to the vendors. And in the last case, we are assuming that the company has selected four-way matching. Now, in this case, we will compare quantity billed with the quantity received, invoice price with the purchase order price, quantity billed with the quantity received, and the quantity billed with the quantity accepted. Similar to three-way matching, has similar first three steps with one unique concept. The only additional case is quantity billed with the quantity received. Again, the quantity billed will be available on the invoice, whereas the quantity accepted will be getting from the acceptance document which was sent by the inspection and the quality department to the accounts payable department. So, when everything is matching, then the accounts payable department will make the payment to the vendor because we are passing the criteria of four-way matching. So, now you can understand how two-way, three-way and the four-way matching is working. It is a simple internal control where we are trying to make sure that we are paying the right amount to our vendors and we are not paying for the product or services we have not received. So we want to make sure that we are paying the actual quantity which we have received and the actual service which we have received. That's it. These are the two-way, three-way and the four-way matching process in accounts payable. Thanks for watching.